Never forget that intelligence rules the world and ignorance carries the burden. One of my favorite quote from Marcus Garvey. See it over my shoulder. Intelligence rules the world and ignorance carries the burden. I mention this because over the last couple of months, maybe even last couple of years, I've been hearing about something I've really never heard about in terms of retirement investing. And it is something called a self-directed IRA, right? Never heard about it, but through reading and just to get myself educated, I've come across it. Self-directed IRA. I thought for a long time that I was self-directed, right? But that's not exactly true, right? If you have your investments in Schwab, Fidelity, or Vanguard, and as the usual custodian, I'm here to enlighten you that your investments are not self-directed. Let's roll back. Let's step back. What exactly is a self-directed IRA? Before we get into it, welcome back to another episode of the MD Investor, the channel where we try to educate ourselves financially and teach our children so we can break the cycle of generational poverty. What is a self-directed IRA? A self-directed IRA is just like a regular IRA, but unlike your traditional 401k and employer-sponsored plan, which limits you, and that's a key word, limits you to stocks, bonds, ETFs, index funds, a self-directed IRA, you are not limited. You could invest in those regular traditional stuff, but you could also invest in what they call alternative assets. What is alternative assets? I hear you thinking. Alternative assets are assets that are alternative to the traditional stuff we just mentioned. Like what? Really, the government allows you to invest in pretty much anything except for two categories. There's two categories of stuff you can invest in. You can invest in insurance, right? You can invest in insurance, and you can't invest in collectibles. So you can't invest in a stamp collection or something like that. But you can invest in pretty much anything else. So that's what. So a self-directed IRA is an IRA with a custodian, not Schwab or Fidelity or anything like that, because they cannot hold these alternative assets. These custodians that allow you to hold these alternative assets are different. You don't see them advertising on TV, and you may ask yourself, why? Why don't I see all these companies advertising? Because Wall Street has an incentive to keep you in the old mold, right? When you invest, when you're in your employer-sponsored plan from Fidelity or Schwab, they are making money, right? Your employer reached out to them to set up a 401k or 403b or whatever, and they're getting a financial incentive to have you invest with them in these traditional assets. These alternative custodians, will allow you to hold assets that are alternative to the things we mentioned, such as you could invest in private company. This is how years ago you heard Mitt Romney had a Roth IRA worth $100 million because he worked at Bain Capital, which was a private company, right? You can't invest in Bain Capital like you can invest in McDonald's, right? You just go, because McDonald's is a publicly traded stock. You just go type it in. You get a brokerage account, you go type it in, and you buy a share from McDonald's. Bain Capital is different, right? Because it's not on a public market, so it's on the private markets, right? So it is accessible to fewer number of people. Sometimes there's criteria like you may have to be an accredited investor, but not always. An accredited investor is basically someone that has a net worth of at least $1 million, not including their primary home, or $200,000 for the last 2 years, and have a reasonable expectation of making it again in this current year, or a married couple $300,000 for the last 2 years and a reasonable expectation of making it in the current year. Sometimes you have to be an accredited investor to invest in some of these private companies, but not always. And the reason why it is so beneficial because the rate of return may be better, right? The rate of return may be better. So you invest in a startup before the company goes public, right? A lot of times you hear companies having an IPO, an initial public offering. Now they're going to go public. But before they go public, what were they? They were private. They were a privately held company and only accessible to more exclusive, you can say, clientele, maybe accredited investors, maybe people with a self-directed IRA, because you can't invest in a private company with Vanguard. Another thing you may invest in with your self-directed IRA is real estate. People love real estate. You can invest in a real estate fund, which is basically a fund ran by an operator that pools investors' money together, right? So they may want to buy a building for $400 million and they raise funds from 20,000 people to buy this building. You can invest in that fund, but not through Vanguard or Fidelity. You can invest through this fund if you had a self-directed IRA or self-directed solo 401k. And this is a term I'm throwing out, but basically if you had a self-directed account, all right? And the return on investment may be staggering, right? You can buy a rental property in a self-directed IRA. Your self-directed IRA would your self-directed IRA would buy the property, right? You would pay for any type of repairs or bills through your self-directed IRA, but your self-directed IRA can buy a rental property, right? These are things that when I first started learning about it, I said, there are levels to this. That's what that's what came to my mind. There are levels to this, and that's why I always talk about continuing to educate yourself. You can invest in precious metals. You could, right, gold, silver. You could invest in digital currency, Bitcoin. You could invest in racehorses. You could invest in cattle. Almost anything except for those two exceptions I mentioned. So now when you start thinking about return on investment, right, where you are investing in something with a tremendous amount of growth potential, how much better would your retirement be? So by no means am I an expert in self-directed IRA, but it's something I came across, something I think we should begin to educate ourselves into it, because it may make a huge difference for a lot of us with our retirement. Another thing to consider too, the diversification, right? We always talk about being diversified within the stock market, but it's also good to be diversified outside of the stock market, right? So if you have all of your money in the stock, if you have all of your money in the stock market and the stock market goes down, right, because tariffs and whatnot, right, you have a significant impact on your portfolio. But if you have a portion of your money outside of the stock market, right, and maybe private companies, startups, real estate, you're diversified away from the stock market, and if the stock market fluctuate, it won't affect you as much. So how do you get into one of these self-directed IRAs? Well, let's go on Google and Google self-directed IRA custodian, and a whole bunch will come up. You call them, you speak to them, you do research. Now, can you just turn your money over? It depends, like a lot of things in life, right? If you have a Roth IRA, then yeah, you can, right? If you have a Roth IRA that you've been funding for X amount of years and you just want to convert it from a Roth IRA with, your traditional custodian to a Roth IRA or a traditional IRA with a self-directed custodian, then you can do that, right? You fill out the necessary paperwork, you call them, you fill out the application, and then it'll be a direct custodian to custodian transfer. And then now your money will be in a self-directed account, and you'll have the option now of investing in traditional stuff or some of these alternative stuff that we were talking about. If you have a 401k, right? If you have a 401k, your employer probably has it in the plan documents that you are not able to convert or roll over your money to a self-directed IRA if you're under the age of 59 and a half. Let's say that again. If you have a 401k and you're trying to roll your 401k over to a self-directed IRA or a portion of it, right? You don't have to do the whole thing. You may say, you know what, I want to do a portion of my 401k into a self-directed IRA so I can start dibbing and dabbing into the self-directed stuff. If you're under 59 and a half, you won't be able to do that. If you're 59 and a half and up, you will be able to roll over all or a portion into a self-directed IRA. Then you have the option. The other thing too, in which you can roll a 401k or 403b, any of those things into a self-directed, is if you no longer work at that company, right? So if you had a job that you had a 401k 10 years ago and it's just sitting there, since you no longer work there, right? There's separation of service, you can roll that over into a self-directed IRA. And also if the company have disavowed or stopped the program or stopped the plan, right? So if your company has discontinued the 401k, right, then you can roll over. If they've discontinued it, if you're 59 and a half age, or if you no longer work for the company, those are the three reasons. If you satisfy any one of them, you can roll your traditional 401k or 403b, your traditional employer-sponsored plan, into a self-directed IRA. So again, I encourage you to study, read up on it, and it may be something that can turbocharge your retirement investing and make a difference. Again, this is the MD Investor. Come back with another video to increase our financial IQ so we can break the cycle of generational poverty. MD Investor out.